From our studios in Scottsdale, Arizona, welcome back. This is Retirement News Online. So taxes don't retire when you do. In fact, they often become one of your biggest controllable expenses. Now, smart advisors help clients reduce lifetime taxes, avoid surprises, and create more efficient income in retirement. And here to talk about that is J.C. Hutchins with Clover Wealth Partners in Louisville, Kentucky. So I think a lot of people, when you start working with them, they consider tax planning as it's really tax prep for them, right?
Okay.
They go to a CPA, they go to an accountant. They're essentially historians. They just look in the past and say, this is how much you owe, and then next year they kind of do the same thing. Do you think people really don't understand how important tax planning is?
I think that would be true. They just go through the motions, typically, like you're saying. But when they realize that not only whether it's your CPA or tax preparer and your financial advisor team up, they can really help you out in terms of saving at tax time.
Yeah, and I think in Social Security, I think a lot of people, when they think about Social Security maximization, they're trying to get a bigger, monthly check, right? But the most important thing is probably minimizing taxes in there too, because that's where a lot of the actual extra income or cash flow will come from. Is that correct?
Absolutely. Yeah, that's correct.
Yeah. So Roth conversions. That's a real tax efficient strategy that's very popular these days. There's lots of strategies around that and products and solutions. How do you integrate that into a tax planning process?
It's always a discussion, and again, teaming up with their tax advisor. But it depends on a couple different scenarios. Obviously, their age and where they are. Whether it's pre-retirement or in retirement. It may not make sense, obviously, to do a Roth conversion at that point in time, but as long as we get to them at a specific age, we can obviously maximize taxes at that point in time for their future.
Required minimum distributions, or RMDs, affectionately known as RMDs. Everybody hates them. They start happening now at age 73. They give us a little bit more time.
Right.
I don't think a lot of people are aware that they increase over time, and that can lead to a lot of unnecessary taxes being paid. How do you manage the tax implications of RMDs?
Again, making sure they're educated in the process, right? Like you said, most people aren't aware that they do increase. There's different ways to do that. Obviously, we just touched on the Roth conversion if we get to that in time. Which is a QCD, which is a qualified charitable distribution. We've walked plenty of clients through that. Not only do they get to give to their church or their charitable organization, but obviously they don't have to have the tax burden of that RMD as well.
So when you deal with a client for the first time, what do you think is the biggest misconception they have about taxes and tax planning when it comes to their retirement and retirement income?
Maybe it's not a misconception. I think they don't really focus on that as much as they need to. They kind of go through the motions. Yeah, I need to pay taxes and all that, but they have not been sat down and gone through the process of how can we help minimize taxes here.
And they're working with accountants and CPAs who really aren't tax planners. How does somebody know if they've got the right advisor?
I think that's a good question. I think it's tough if you don't have maybe multiple experiences with advisors. I think it's always good, especially on the tax side, to have a CPA, right? Obviously, you can work with an H&R Block or something like that, which is fine for most of us, but for somebody who maybe is a small business owner or has some extra things in there, having a CPA in your corner is probably ideal. So.
J.C., thank you so much. That's J.C. Hutchins with Clover Wealth Partners in Louisville, Kentucky, and this is Retirement News Online. We'll see you next time. Thanks for watching.